Hi, this is Jason, Chief Technical Analyst with ToroAlerts with your weekly market recap for the week ending January 6th. We had some pretty nice bullish price action finishing off the week. So let's dive right into the charts and take a look at what we're seeing. Starting out with the Bitcoin chart. Looking sort of bullish, not any major moves to the upside, but we are getting back up above a pretty key level right around 16,800 where there's some pretty major volume support and resistance to deal with. And we did get back up above that resistance. Now seeing if it'll ultimately hold as support. And if it does, then potentially we might be looking for a move back up to about 18,000 or so, which is that anchored VWAP position that Bitcoin's had a pretty tough time getting back above and holding. But so probably expecting more sideways price action in the cryptocurrency markets, but there might be a setup here going into next week, or maybe we do see a move to the upside and maybe get back up and retest that 18,000 on Bitcoin. And then take a look at the Ethereum chart. We are back above the 1225 level, which we've identified as a really key area of support to watch for. And we are back up above that level. So as long as we're holding 1225, there could be some upward momentum in Ethereum. Potentially got some major volume support and resistance right around 1335 or so. And then also right around 1400 on Ethereum. So those would be my two upside price targets. But probably just more sideways price action there as well. And then taking a look at the total cryptocurrency market cap, we are back up above the 762 level, which was a pretty key area of support resistance that we are now back up above, and it looks like we're holding above that level, so we might see some upside momentum in the overall cryptocurrency market cap as well. And then jumping over to the traditional market, starting out with the S&P 500. We saw that big move on Friday, looking pretty bullish for the S&P 500 going into next week, although we did hit that 390 level and weren't able to get above it, but we did get up above some pretty key areas of note. We didn't get above the 50-day, but we got pretty close, and we did break up above that anchored VWAP position, which the S&P 500 had a pretty tough time getting above, really going all the way back to about the middle of December. So we've just kind of been hanging around some sideways price action on the S&P, and was really looking for a definitive move either to the upside or downside. I was definitely thinking more to the downside over the last week or so, but looks like we are heading to the upside on this one. And if we do continue to see some follow through, get up above that 390 level, which has been a really key area on the S&P 500, then potentially we'll see a further rally, and the big question will be whether we can break out above that 200-day moving average in our down channel trend line. This down channel trend line here we've not seen a close above that down channel trend line since the sell-off started in late 21, and so that's a really key area to watch for. If we do happen to see a breakout above those levels, then that would be very bullish in the short term, and we might get a bigger rally. But things at least going into next week are starting to look somewhat bullish, looking at a lot of these charts here. And then taking a look at our S&P 500 breadth measures. So we're seeing the number of stocks above their 200-day moving average is now at about 57%. We talked about the 50% level being a really key area to watch for. If we ultimately saw it break down below those levels, and that would be pretty bearish. But we saw that 50% level hold, and now we're starting to see more stocks getting back up above their 200-day moving average. And then we're also seeing S&P 500 stocks up almost 68% of them above their 50-day moving average now as well. And so both of those breadth measures are definitely looking short-term bullish for me. And then we take a look at our NASDAQ. We had a big move out of the NASDAQ on Friday, but ultimately got up to that 269, 270 level, and failed off that level. So I wanted to be getting a trade opportunity to the long side on the NASDAQ. I'd want to see price action get up above that 270 level. Otherwise, I'd probably leave it alone. But there could be a potential setup for a broad market rally, including the NASDAQ. And if that does happen, we'll be looking for that 270 to break to the upside. And then take a look at our Dow Jones Industrial Averages. Definitely looking pretty impressive here, as we were down below our 50-day moving average and starting to look potentially bearish. But now we are back above our 50-day moving average, and starting to look somewhat bullish for the Dow Jones Industrial Averages closing the week out. So we do have a pretty key area of resistance at around 343 to deal with, and so we'll see how it reacts once we get up to those levels. But if we can see it rally past that, then potentially we could see the Dow head even higher from there. And our previous highs on the Dow were close to this Fibonacci extension level, which is at about 366.50 on the DIA. And then take a look at our transportation index. just closed right at, or maybe I don't think it's really slightly above. It's pretty much right at that 50-day moving average, and so we'll have to keep a close eye on the transports next week to see if it reverses off that level or if we ultimately head higher. But we still do have this down channel resistance on this wedge, and we also have this Fibonacci extension level at about 14,360. So we got a couple areas of resistance to kind of push through first on the transports, but if we see it break up above those levels, then that would definitely be a bullish development for the transportation index. And then take a look at our Russell 3000. We kind of were chopping around just slightly above that 200-week moving average, and ultimately started headed higher on the week this week. The key areas we'll be watching for is that 50-week moving average and this down channel trend line that has been respected for quite some time now, and so if we can see it break above those levels, we likely will see a bigger rally in the markets, but we'll have to keep a close eye on that one as well. And then take a look at our Russell 1000, our large caps, the IWB. We did see a slight move to the upside on the large caps, but ultimately looks like we're up against resistance on that anchored VWAP position at about 213.25. So we'll have to see if we can break through that going into next week, and we still are below this wedge pattern as well. So we want to really see a break out of that wedge pattern to get really bullish on the large caps. And then take a look at our small caps, the Russell 2000. Those looked actually a little bit better than the large caps did this week and had a pretty good move to the upside. But we are still within this wedge pattern here, and so we'll be looking to see if we can kind of break out above these moving averages as well as that wedge pattern. And if we do, then that would certainly be a pretty bullish development for the small caps. And it looks like right now that wedge pattern is currently sitting at about 180 to maybe 185, depending on how quickly we get up and retest that. But right now it's looking like there's a pretty good chance that small caps will at least get up and potentially retest that 200-day moving average and maybe this wedge pattern as well. And then take a look at our growth versus value. We can see value still outperforming growth, and we can see that really in our indices that we were looking at. The Dow Jones Industrial Average is definitely looking the strongest of the three, and so we're continuing to see value outperform growth even with the bullish price action we saw closing the week out. And when we take a look at our sectors that we track, last 5 trading days of the week, we can see gold miners up almost 10%, so it had a really big week in that sector. Other sectors like retail, metals and mining, steel, and consumer services all up between 5 and 6%. And as far as the gold miners and precious metals are concerned, I think we're getting pretty close to potentially at least a short-term top. Really looking for a price correction on the precious metal space in the short term, and then really looking for a much bigger move to the upside after that. So I'm kind of being somewhat cautious. A lot of people are calling for getting into the precious metals space right now, and if you're more of a long-term investor, it's probably fine, but being more of a short-term trader, I'm looking for that correction first, and then I'll be looking to probably get into some long trades in the precious metal space. And then looking at some of our worst performing sectors on the week, we can see oil and gas exploration down almost 3%, agriculture down almost 3%, and we saw cloud computing down about 3.5%. With our worst performing sector or asset class that we watch is natural gas, down over 18% on the week. So natural gas has just been getting beat up really bad. A little bit of short-term truce out of Russia, as well as a much warmer January, I think has put a lot of downside selling pressure in natural gas, but I think we're getting pretty close to the bottom there, and we'll likely see natural gas probably at the leaderboard here in the next coming days or weeks, but probably coming pretty close to a bottom, I think, on the nat gas prices. And then take a look at our U.S. oil barrels. You can see we opened up the week above $80 a barrel, ultimately closed the week off about $73.50 or so. I think we're still ultimately heading lower on the oil prices, still looking for that retest of a 200-week moving average, which is currently just right around 65 per barrel. And then our commodity prices are down on the week pretty aggressively. However, this 267 level has been a key area of support and resistance we've been watching for. We have seen it drop below this level a few times, right around these similar price action levels, and then ultimately whipsaw back up to the upside. So be a little cautious, maybe getting too aggressive on a short right here, but we've been talking about for quite some time, if we can see some price action stable at 267, then we'd be looking for a potential retest of that 243 level on the CRB. But we have seen a lot of kind of whipsaws from right up just slightly below that 267, so we want to be cautious and make sure price action sticks below that 267 if you want to be putting a short on in the commodity space right now. But for now, as long as we're below 267, then I think we have to be somewhat bearish on commodities. And then take a look at our global world index. So this is the rest of the countries minus the United States. On the ticker VEU, we can see we're up against this $52 price level, which has acted as a key area of support and resistance over the past. We are up against that right now, so we did clear the 50-week moving average, which is somewhat bullish, but we are also just up against this 52 level. So going into next week, if we can see price action break above that 52.20 or so trend line resistance, then we'd be looking for some further price action to the upside and at least get back up to some of those moving averages. 200 days sitting at about 54, and then we also got another area of resistance right around 55 or so on the VEU. And then the high yield corporate bond ETF is an interesting one. We did a short video on this one recently, and I think this is definitely a pretty bullish development, as we talked about how we were probably expecting the HYG to fail off of these upward levels, as that's really all it's done ever since we've kind of been in the steady decline. Anytime the HYG is in a steady decline, the stock market tends to follow. And so seeing the HYG break up above this trend line, which hasn't been broken since late 2021, and then also getting back up above 75 on the HYG. I think both of those are pretty bullish developments, which have broader implications, I think, for the market, and I think is giving us a potential signal that we might actually see a bit of a rally in the markets in the next week or so. And then take a look at our gold, precious metal prices. Gold's looks like it's getting up, potentially going to retest that 174.54 level. I'll be looking for that potentially as a top. So somewhere between about 174, 175 on the GLD is potentially a top on gold prices, at least in the short term. And then I'll be looking for a correction. And after that, I'm expecting a much bigger move to the upside. So very bullish on precious metals for 2023. However, I think we're pretty close to a correction. So I don't know if I'd really be looking to enter any new trades in the precious metal space at quite this moment. Really probably looking for that correction first, and then I'll be getting pretty long, I think, in both gold, silver, as well as the miners associated with them. And then take a look at our silver prices. We can see silver's already kind of chopping around sideways, kind of bouncing around in between this 2250 and about 2150 or so. But I think there's a good chance that the silver prices have probably peaked in the short term, and I'm looking for a correction on the silver prices. Some of the downside price targets I'll be looking for, this 2060 level is a pretty key area of resistance to deal with. We also got the 0.382 retracement, which would be about 2033, or maybe we even get back all the way down and retest that 200-day moving average, which would also be about a 50% retracement off this recent rally, which would put it down to about 1960 or so. So somewhere between about 1950 and about 2050 or so would be kind of the correction levels I'll be looking for on a price move lower on silver. And then at that point, once we start to see the price action move back up to the upside, then I'll be getting pretty bullish for the silver to move up and get even higher than the previously topped out at about 2250. And then taking a look at our interest rates, pretty big developments out of interest rates, especially to close the week out. We saw a big move to the downside on our 2 years, with the week closing out at about 4.25%. And then on our 10-year, we also saw a big move to the downside on that as well, closing out the week at about 3.56%. And then on our 30-year, also moving quite a bit to the downside and closing out the week at about 3.68%. So seeing across the spectrum of interest rate time periods, we're seeing them all head south. And so what that's telling me is there's a pretty good chance the bond trades are working out well, and I've been in a few bond trades, and those are starting to pan out pretty nicely. So I think very bullish bonds going into 2023, and it looks like we're already getting some of that upside momentum in the bond trade, and I think there's just a pretty good chance that, especially on the more later dated rates, like on the 10-year and the 30-year, I'd be pretty surprised if we ultimately didn't already have the top put in on those charts. So definitely looking like a great setup for the bond trade in 2023. And then taking a look at our put call ratio, we can see that we've had some spikes, very elevated. People buying a lot of put protection. We ultimately closed the week out right about at the 1 level, which is sort of anything above 1 is considered elevated put buying protection. So we're just kind of right at that high end of the normalized range. But if we see a rally going into next week, I think we'll see that ratio drop quite a bit, as we'll probably see a lot of shorts get stopped out if we continue to see the equity markets move to the upside. Then we'll take a look at our dollar. It looked like we were potentially putting a bottom in on the dollar, and then looking at a possible breakout. Thursday we saw a pretty strong move to the upside, and then Friday we actually started the day out with a surge to the upside. Got all the way up to about 105.60 or so on the DXY, and then ultimately had a pretty big reversal and ultimately settled down at just south of 104 on the DXY. So still kind of uncertain where we're heading on the dollar. As long as we're above 103, I don't think we're looking for any major sell-offs from the dollar. So I'd be looking for that 103, 104 as a pretty strong area of support. But if we do see that fail, then there's a pretty good chance that we could see the dollar get at least down to 100 or so on the DXY, and potentially even fall further. So definitely keeping a close eye on this chart, as the trend of the dollar has oftentimes been a pretty good signal as to the trend of the overall markets. And so definitely just a lot of kind of uncertainty on the dollar right now, as we obviously had a couple of days where it looked like it was about to break to the upside, but then a reversal off of that. Oftentimes when you have these failed moves to the upside, you'll oftentimes get a bigger move, reversal to the downside. So keeping a close eye on the dollar going into next week. And then take a look at our yield curves. We can see our 10s minus 2s is still very negative, almost negative 0.7%. And then an interesting one I thought I saw today was that 10-year minus 3 month had a big move to the downside, and we're now sitting at negative 0.95%. So still some extremely inverted yield curves. I think just giving us that indication that caution should be used going forward, as while we might be looking at some bullish price action in the short term, more medium to long term, I'm still pretty bearish. And then we can take a look at our VIX to close out the week. Still just a lot of sideways price action in the VIX. If we see a break above 25, I think that would potentially be a signal that the markets are starting to fall apart. And if we see it stay below 25, especially if the dollar's not rallying, then I think that could be a signal that we might get a bit of a bounce in the markets in the short term. So definitely something to keep a close eye on, and if we see a big spike up above 25, I think that'll be a key area I'll be watching for potentially a reversal in the markets to potentially head lower. But for now, things are starting to look pretty bullish, at least in the short term. And that's going to do it for the week. So thanks for tuning in, and make sure to download the ToroAlerts app on the App Store. We've got one for stocks and one for crypto, and you can check us out at ToroAlerts.com.